Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Tuesday, September 18, 2012. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Having said that, however, even though the trend is down and the sellers were strong enough to take the market down below the previous low, they failed to close with control of this market. We have a very small black-bodied candle with the largest shadow on the bottom, and the market has closed up above the midpoint level, between the midpoint level and the high. The shadow on the bottom highlights the sellers losing commitment down around these levels, just below the low of the previous trading day, and the buyers have come back in to close the market up and taken control at the end of the trading session. The buyers, having gained control, have only a fairly weak control. It's a moderate amount of control. It's not strong control because they haven't closed the market right up towards the high. But the relevant thing here is the large shadow on the bottom, which represents the sellers losing commitment, and also the small body. Even though the body is black, the sellers made net bearish progress, but they've only made a smaller amount than the previous day, and it does set the market up for a potential change of trend. So we should be watching the high of the current candle, which is at 1461.47, for a potential higher high and higher low. Now this is similar to a hammer type pattern. It isn't quite, because we don't have much of a downtrend to reverse. We have two candle downtrend, so it's not a substantial downtrend for a reversal, but the ramifications are the same. There is potential for that change of trend to the upside. In terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and once again today we've seen the market test to the 100% level as we saw yesterday, and we've traded down through there, and we've seen the market rejected from below that area. So that could be significant for this market. It does set the market up for that potential change of trend. If we see the trend continue to the downside, however, we have a target at the 161.8% level at 1447, but it certainly does seem that there is strong potential for a change of trend to the upside. In terms of the Fibonacci retracement of the prior uptrend, and here we see the market being rejected from the 23.6% level once again. We tested almost to that level for the previous day's trading, and today we've tested exactly to that level, and we've been rejected from that level. It's only a minor level, but what we need to do with our interpretation of the Fibonacci ratios is look at the short-term dynamics in the market, the balance of buyers and sellers, and here in this case the sellers have lost commitment. They've failed to maintain control of this market. The buyers have taken control, and that sets the market up for that potential change of trend to the upside. Now in terms of Ichimoku, we have a bullish market in all three time frames. Once again, bullish in the long-term time frame because we're trading above the cloud, in the medium-term time frame by trading above the Kijun-sen, the pink line, and in the short-term time frame by trading above the Tenkan-sen, the green line. We have the Chicken span trading above the corresponding price action, so the market that's confirming what we're seeing in all three time frames, a bullish market. And we have very strong support down here around this 1440 level, so if the market does continue trending down, that is a very strong level, and we do have a confluence of the Ichimoku indicators roughly around that level, extending down to about the 1435 level, so a zone of potentially strong support for this market. Now if we do see a change of trend today and the market give us a higher high and a higher low tomorrow, then we do have a potentially decent resistance up at the 1474 level and extending up from 1466 roughly up to that level. We can see the strong rejection that we saw 3 trading periods ago, and that does set that area up as a potentially strong area. If we do see the market break out up above there in a bullish manner, then we don't have any major support based on peaks and troughs until the market trades up to 1523. So we could see the market trade substantially higher if we see strong bullishness from this point in. So overall, a bullish market in all three time frames. The trend in the first time frame is down, but the sellers are no longer supporting the trend to the downside. The buyers have taken control. The sellers have lost commitment. We need to watch the high of the current candle for a potential higher high and higher low, and a resumption of the uptrend in the first time frame and continuation of this second time frame uptrend.